IREN stock continued its remarkable run on Tuesday, closing up $5.42 or 8.5% to finish the session at $69.56 per share. What makes today's performance so impressive is that broader markets were down. The S&P 500 and Nasdaq both finished in the red, weighed down by concerns over trade tensions, a softening consumer confidence report, and profit-taking in big tech. Yet, in the middle of all that weakness, IREN stock surged. So the question is, why? What's behind the resilience and strength that this company continues to show when most of the market is struggling to find direction? At first glance, it might seem counterintuitive. Usually, when markets are risk-off, high-growth names like IREN, especially ones tied to AI and Bitcoin infrastructure, tend to pull back. But instead, we saw the opposite. IREN didn't just hold its ground, it gained almost 9%. And when you dig into what's been happening around the company, you start to see why investors are treating IREN differently right now. The first and most direct explanation is new contract momentum. In the past few days, IREN announced another series of multi-year AI cloud agreements with major technology firms, centered on the deployment of Nvidia's latest Blackwell GPUs. These contracts expand the company's AI cloud customer base and add significant long-term visibility to its revenue pipeline. The market is starting to realize that these deals are not one-offs. They're part of a pattern that positions IREN as a legitimate player in the AI compute economy. The combination of existing deals worth around $225 million in annual recurring revenue and the promise of more in the pipeline provides something investors crave in volatile markets: consistency. These new agreements are being layered on top of a business model that's already proving itself to be both scalable and capital efficient. Unlike many AI startups that are still trying to raise money to build infrastructure, IREN already owns it. That's the second reason the stock has been so resilient: its structural power advantage. Analysts at Bernstein and others have recently emphasized that Bitcoin miners like IREN have a built-in edge when pivoting into AI infrastructure because they already control massive, grid-connected, high-density power capacity. This is one of the hardest things to secure in the AI race. Companies can buy GPUs, but without energy and cooling capacity, they can't run them efficiently. IREN, on the other hand, has been operating at scale for years. They've simply repurposed their mining infrastructure into something far more profitable and forward-looking. That dual-engine model, mining on one side, AI cloud on the other, is giving the company flexibility that few others have. The Bitcoin mining segment continues to generate steady cash flow, helping fund expansion without the same kind of dilution or debt risk other companies face. Meanwhile, the AI cloud business is ramping rapidly, unlocking recurring, contract-based revenue that can command higher multiples in the market. This combination is what gives IREN its durability. When the market turns volatile, investors gravitate toward companies that can generate real cash while still offering growth. IREN is now being seen as that rare hybrid, a play on the future that still has footing in the present. There's also a third factor at work: the ongoing re-rating of IREN's narrative. What began as a speculative trade on a miner experimenting with AI has turned into a full-blown thesis around transformation. Investors are starting to see IREN less as a crypto-linked stock and more as a next-generation infrastructure company. It's a subtle shift, but it's meaningful. The company's announcements now reference large-scale compute agreements, partnerships with Nvidia, and AI customers. The crypto angle is still part of the story, but it's becoming the support act rather than the headliner. This reframing matters because it broadens the investor base. AI and cloud infrastructure funds, not just mining or digital asset investors, are now paying attention to IREN. That change in perception can create powerful inflows, especially when broader markets are in rotation mode. Beyond the company-specific factors, there's also a technical story unfolding. Over the past month, IREN has shown a pattern of strong accumulation. Each time the broader market dips, the stock tends to consolidate briefly before resuming its uptrend. Tuesday's 8.5% gain came on heavy volume, a sign that institutional buyers were active even as broader sentiment weakened. That's the hallmark of relative strength. When a stock continues to attract demand in a downtape, it's usually because large players believe in the underlying catalyst enough to ignore the noise. The fact that IREN held key support levels during last week's macro-driven sell-off and then bounced sharply this week reinforces the idea that this is not just retail-driven momentum, it's conviction-based positioning. It's also possible that traders are starting to position for a potential earnings re-rating. Recent quarterly results showed IREN posting over $148 million in revenue, with growth in both the mining and AI divisions. That kind of balanced performance, especially at a time when many high-growth names are burning cash, has given investors confidence that management can execute. The company has shown it can grow revenue while maintaining operational discipline. And as the AI cloud business continues to scale, margins are expected to expand, driving higher profitability over time. Even the company's recent convertible notes raise, $875 million announced earlier this month, is now being viewed in a different light. Initially, some investors worried about dilution, but the market has since recognized it as growth capital. That capital will likely be used to accelerate the rollout of GPUs and support the infrastructure needed to meet these new contract commitments. It's a smart move. Securing financing during a period of strength allows IREN to expand aggressively while competitors are still trying to raise capital in choppy conditions. Macro conditions may also be quietly working in IREN's favor. Interest rate expectations are softening, and many analysts believe the Federal Reserve could cut rates further before year-end. Lower borrowing costs tend to favor growth and technology stocks, especially those with capital-intensive expansion plans like IREN. At the same time, the trade war fears that rattled markets last week may indirectly benefit domestic infrastructure players. If chip export restrictions tighten and global supply chains become more fragmented, North American data center providers could see increased demand from companies looking to localize compute capacity. IREN, with its expanding sites in British Columbia and Texas, sits directly in the middle of that trend. Then there's sentiment. In many ways, IREN is becoming one of the market's quiet confidence trades, a stock that reflects the broader AI story but without the extreme valuations of big-cap tech. It's accessible to retail investors, understandable to institutions, and backed by visible progress. It also has a unique emotional edge. The idea of a company reinventing itself successfully resonates with investors who've seen so many AI-themed ventures overpromise and underdeliver. IREN is delivering results. And that's why, even on a down day for the Nasdaq, it keeps finding buyers. Looking ahead, the next key milestones for the company will revolve around AI cloud execution and scaling. Investors will be watching for updates on how quickly the new GPU deployments are coming online, what utilization rates look like, and how those metrics translate into recurring revenue. Any evidence of acceleration could support the argument that IREN deserves a higher multiple, especially if it continues to post strong top-line growth. Analysts already see room for expansion, with price targets ranging between $75 and $80, and several research firms maintaining buy ratings. From a technical standpoint, the stock is now entering what looks like a new price discovery phase. Having broken above $65, there isn't much overhead resistance until the 75 zone. Momentum indicators are strong, but not yet overextended, and the rising volume trend suggests that the rally still has fuel left in the tank. If broader markets stabilize or recover next week, IREN could continue to outperform, potentially testing new all-time highs if sentiment stays supportive. But perhaps the most important takeaway from Tuesday's session is the decoupling we're seeing between IREN and the broader market. That's not easy to achieve. Most growth stocks move in tandem with the Nasdaq, but IREN is beginning to trade on its own fundamentals. That's often the mark of a stock transitioning from speculative story to institutional core holding. It doesn't mean there won't be volatility, there always will be, but it does mean the market is starting to view IREN as something more durable than a momentum trade. For long-term investors, that's significant. It means the narrative has crossed over from hype to substance. The company's AI cloud pivot is no longer just potential, it's operational reality. It's building the infrastructure, signing contracts, and expanding at a pace that shows real execution. And as those fundamentals solidify, the stock may continue to attract new investors who've been waiting for confirmation that the story was real. Tuesday's rally, in the face of broader weakness, was one of those confirmations. So, while other tech names spent the day drifting lower, IREN once again stood out as an exception. It's a stock with momentum, a company with catalysts, and a narrative that's gaining legitimacy by the week. For those watching from the sidelines, this may be a reminder that leadership in the AI sector isn't just about the giants, it's also about the builders providing the backbone of compute. That's what IREN is becoming. As we move into the back half of the week, the key question isn't whether IREN can sustain its rally, it's how far the story can go as the company keeps delivering on its AI infrastructure roadmap. With contracts flowing in, GPU capacity expanding, and investors finally recognizing the hybrid model strength, IREN's trajectory continues to look remarkably strong. The market may be turbulent, the headlines may be noisy, but the underlying trend remains clear. IREN is executing, adapting, and leading. Tuesday's rally was more than just another up day. It was another sign that this company is beginning to separate itself from the pack. And as long as that continues, the story still looks like it's only in its early chapters.